Traders, this is a massive FOMC rate decision with markets expecting another cut from the central bank, but that is not the key. Let's break this one down. Hey, traders, happy new week. I hope we're all well and truly. Yes, we're back with another week in these beautiful markets. But anyway, back to the video. FOMC rate decision this week. Markets, obviously, it's largely expected. It's largely priced in. Let's just bring this up here. My charts might be messy and everything might be messy, but it's fine. I've been doing a number of demos today, demonstrations over the weekend today. So let's just quickly bring this up. Obviously, FOMC decision on Wednesday. Markets are largely priced in, expected for them to cut by 25 basis points, taking the base rate down to 3.75% from 4%. Okay. Now, what I want to show you here, obviously the Fed Watch tool, which I put a number of people on. When you look at the Fed Watch tool, we can see for the December meeting, it is basically a 90% probability chance that they're going to be cutting by 25 basis points. Now, the very, very key here, just your attention a moment before we talk about the markets on the charts. The very key here is that you see the high probability they're going to be cutting rates. The high probability they're going to be cutting rates is almost 90% probability priced in. That's huge. So remember before, this is what I always say about things being priced in. This has been priced in. It's been expected for a few weeks now. At least a couple of weeks in terms of the very high probability, but a few weeks, markets have been largely expecting that this cut is going to happen in December. Now, we're expecting this. So, when you hear me have said, I've said this for years, right? Since I've been doing content since 2016, I've said this for years. We buy on the anticipation, we buy on the rumor, we sell on the fact. Obviously, in this case, the dollar's been coming under pressure in an expectation of this rate cut. And I'm going to talk about beyond in a moment, but in expectation of this rate cut, one of the reasons why dollar had some downside pressure, it eased. We're going to look at the chart in a moment. Okay, on the anticipation, that's buying, or buying on the rumor. Stocks we've been buying on the rumor, and then we see the opposite reaction on the fact, right? So in this case, where it is largely expected, is largely pricing for that dollar negative, that dovish scenario of a rate cut. The risks are to the upside for the dollar. There's a possibility that we see the reverse action. Okay, we see the opposite reaction, i.e. dollar strengthens because this is priced in. I'm going to talk about some key points in a moment. Back on that on the FOMC, but I just want to show you the dollar right now. Okay, if we look at the monthly, right, we're in a range. Essentially, we are in a range. We've fallen into this range since April 2025. Since the vast majority of this year, we've been in a range. Okay, we'll say the vast majority, half of the year, right? Now, on the weekly, we obviously staged a massive rebound here in September. We called this pullback. Came into heavy demand at 96.50. Okay, heavy demand there. And then what we started to see on the daily, you can see the structure. We started printing higher high, higher low, higher high, higher low, and you get the point, right? And then it was here in November, late last month. Yeah, late last month, I was trying to think where we were. All the days morph into one to me. Days, weeks, months, all the same. We printed just about, when you look at it, just ever so marginally. Printed a higher high there. And obviously, when you look here, the structure is at risk because we printed high, 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 low. And obviously, a lot of people would have been expecting that this higher low would be here. Okay, where this sort of trend line is, where the mass market, mass psychology is trading. But we broke that. But arguably, structure is still intact here, right? This low area here hasn't been fully broken, convincingly been broken. Yes, we've tapped it. We're testing it. But this area is holding. This is the key. Obviously, if that gives way technically, the price is going to be heading all the way back down to the lower part of this range that we've been stuck within, right? The next part of this range would be heading, as I say, retest down to 96.50. Okay. Now, how do we get the dollar heading to the downside and how do we get the dollar heading to the upside? Should we start off with the upside scenario first? I think, as I just said, I'm going to put this in a nutshell. I'll go into this on a much deeper level and be doing that in my, via the macro mastery in terms of playing out scenarios, trade ideas, all of that. But I'm just giving you guys some overview and some information. It's already, we're already getting into this already. But for the upside scenario, I explained this, right? If they just deliver that 25 basis point cut as expected, initial reaction, we can see some dollar upside. Okay, we can see some dollar upside. I'm leaving stocks for the moment. I'm just talking about dollar. We could see some dollar upside, and obviously gold prices would initially come under pressure. Initially, gold prices would come under pressure. Now, in terms of the sustainability of that dollar move, that upside dollar move would really, really come into question. There'll be a lot of doubt around that. And the reason being, obviously, as I've tweeted to you guys before, you can catch it on Twitter, the full tweet. But basically, markets, as I said to you guys before, markets had only been, I'll pull it up. You can check it out. Markets had only been thinking about the December rate cut, which was largely priced in. I've been thinking about beyond that. Through 2026, we are going to have, obviously, Powell's going to be stepping down at some point. He's going to be finishing as the chair, and we're going to have a new member of the FOMC. And the front runner right now is a gentleman called Kevin Hassett. And Kevin Hassett is a very dovish man. He's saying that we should have aggressive rate cuts now. He is in favor of pro-growth as opposed to focusing on inflation. So he would rather focus on growth. If we're focusing on growth being focused as opposed to being focused on inflation, this is very key. Stay with me here, guys. That means he is happy to cut rates. He doesn't care what happens to inflation. He just wants growth, stimulating the economy, bam, 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 bam. And then we could see, he's an advocate of QE as well. So we could see all that in 2026. If he gets that position, we could see some very aggressive action. So markets are forward thinking as well. And this is what I mean about pricing in. So even if they do not, or say they do cut rates, okay, they cut rates as expected, dollar will rally. But the sustainability of that, keeping in mind what I just said about the dovishness of 2026, would weigh on the dollar. You never know. Jerome Powell could have some big ass cojones. I mean, if I was him, I would, and just be like, Trump, I am not cutting rates right now. Okay. And if he does that, obviously dollar's going to rip it to obviously that higher high. So let's keep that in play. This is going to be very interesting either way. I've got my scenarios all marked up and mapped out. As I say, I'm doing this via the macro mastery. There's a lot there. I just wanted to just give you, this was supposed to just be an Instagram video, but I knew I was going to blabber on. I don't know when to shut up sometimes. Just want to provide value, things you guys think about. But stay ready for that. Digest it. It's not just about the decision. Let me make it very clear. It's not just about that rate cut. Even if it happens, bear in mind, it goes beyond that. It's regarding the forward guidance. What are we to expect after this December meeting? Other than that, guys, look, make sure you smash out that subscribe button and like button, because look, you see how this disappear? I don't care. I'm here for you. But anyway, guys, just smash the subscribe button and the like button if you want more content. Otherwise, and just, stay lit, stay blessed. Let's get it.